Hello and good morning. It is NFP week. Buckle up. It is going to be a wild ride, kind of like a roller coaster that you jump on, immediately regret being on it because it's going in the wrong direction, and catch yourself in line again to do it for another time. That is NFP, and if you're not familiar with what NFP is non-farm payroll. What it does is it measures the change in the number of employed people in the US, excluding those in the farming sector. It is a really important gauge of the health and strength of the US economy. Now, July's NFP report showed a significant cooling in the labor market. This was missing its target of 176,000, hitting only 114,000. This was down from the previous one, which was 179,000, and it later got revised down to just 89,000, which was a massive miss for the U.S. economy. August added 142,000, which was an upward movement, which was an improvement. However, it was still below its projected 164,000. So there has been a significant market cooling when it comes to the job market in the U.S. This coupled with an employment rate which reached up to 4.3% in July and dropped down, but only to 4.2% last month. The dollar has been taking significant shots and looks like it might be in a spot of trouble. If you've looked at the general trend of where the US dollar index has been trading, it has been on a bearish run. So all eyes are on this coming report to see if the softening is going to continue. And this week's NFP report is going to be absolutely important because this NFP report is going to inform what the Fed might do. Now, the Fed is in a rate cutting cycle. They cut by 50 basis points last week previously, and this NFP report is going to determine how aggressive they're going to be in the next two cuts. We have two more expected cuts for this year. However, a strong labor market coming out with this NFP report could convince the Fed to either delay the next rate cut or reduce by how much they want to rate cut overall. Subsequently, a weak one might say that they're actually behind the curve and they need to be even more aggressive than they already have been. So this is going to be really important, and how this comes out is going to determine what the US dollar's position is going to be next to the Canadian dollar, the yen, the pound, and the euro. And we have seen that those currencies have gained some ground over the US dollar in the recent weeks. This is going to determine if that trend is going to continue or not. And let's not forget about other data that could, let's look at other data that could help inform what NFP is going to look like. So if you look at how consumer confidence came out last week, Tuesday, it showed a significant dip, which could signal that consumer spending is on a downward trend, which is really important and really vital because consumer spending makes up about 70% of the US's GDP. So if that is starting to take a dip, there is serious concerns about where the state of the US economy is going to be. If you partner this with a weak NFP print, this could send alarm bells about what the current sustainability of the economic expansion in the US is going to be like. You had unemployment claims that came out last week, Thursday, and those came out a little bit lower. So there is light at the end of the tunnel. It's showing that at least from the unemployment side of things, the US economy is still strong, it's still bolstering. So it's a little bit of a mixed bag right now. So where NFP comes out is going to show the hand of where the state of the US economy is right now. Now, looking forward, to help us predict what NFP could look like, we are going to take a look at ADP, which is coming out this Wednesday, just ahead of Friday's NFP print. Now, ADP is not a perfect predictor of what NFP is. However, it does give you an important glimpse as to what to look out for on Friday. A big hit or miss on this is likely to set the tone of what is still to come. But regardless of your NFP prediction, if you want to trade it, NFP can be very tricky to trade. And that's because it's not just one data release coming out at once, it's actually three. You have the unemployment rate coming out at the same time, and you also have average hourly earnings. Now, all three of these have their weighting in the market, and they don't necessarily all correlate with each other. A big hit on NFP, but a big miss on the average hourly earnings is going to cause a lot of volatility in the market and a lot of indecision. It's a bit of a mixed bunch of data, and the market is going to be a little bit unsure of what to do with it. And you can go any three ways and any three predictions on how that would print out. So if you're trying to trade NFP, risk management is going to be of vital importance, because you never really know which direction it's going to go, and if it's going to fake towards one direction, cause a massive spike, and then go into the next. So if you want to learn more about how NFP works and how to trade it, you can go ahead and look at my YouTube video. You can click the link in the description of this video to send you on there. And if you want to trade NFP with experienced traders who know what they're doing, go ahead and join Project G. The link will be in the description as well. The sooner you join, the sooner you can join their prep call and really figure out what is going to happen this NFP. So I've been Ed Katushabe. That has been the Daily Scoop, and we will see you in the next one.